Recent events have revealed that centralized exchanges are the Achilles heel of cryptocurrency. Whether it's freezing accounts, blocking transactions, or tracking users, it's clear that decentralized alternatives are desperately needed. And one of the only alternatives out there today is Thorchain. Today, I'm going to give you a quick overview of Thorchain, bring you up to speed on some of the project's most important updates, and tell you why Rune could be on the brink of a rally. Before we go cross-chain, there's something I need to explain. If you're here for financial advice, I'm afraid it's not something you will attain. That's because the purpose of this video is only to educate and entertain. Please contact a financial advisor if you're trying to make it rain. Also note that though I do hold Rune as part of my personal portfolio, my objectivity will remain. Now, if this is your first time falling down the Coin Bureau rabbit hole, my name is Guy. Please make yourself at home. This channel is packed with high-quality crypto content that will turn you into a crypto lord. Coins, tokens, news, and reviews are just a few of the topics I explore. If you are in accord, subscribing to the channel and pinging that notification bell is what I implore. If you're constantly glancing at your watch, you can use the timestamps below to skip ahead to any interesting subjects you spot. Just know that watching until the end will help both of us out a lot. Okay, that's it for my intro thoughts. Let's see what Thorchain has been up to and what potential Rune has got. If you've never heard of Thorchain before or just need a quick refresher, here's what you need to know. Thorchain was founded in 2018 by a group of anonymous developers. A handful of these developers have since made themselves known, notably Chad Barraford, who serves as the project's technical lead. Thorchain raised around $2.5 million through various token sales in 2018 and 2019 from the crypto community and a handful of crypto VCs. Some crypto VCs have since accumulated millions more dollars worth of Rune, with Multicoin Capital claiming that Rune is one of its largest public positions. Thorchain's multi-chain beta net called the ChaosNet went live in April 2021, and its core devs are currently in the process of passing on the protocol to the Thorchain community. More on that later. Thorchain aims to make it possible to trade native cryptocurrencies directly between blockchains, the same way you would with a centralized exchange, but in a decentralized way. Thorchain does this using its validator nodes, which must bond, i.e. stake, Rune, Thorchain's native cryptocurrency, on the Thorchain blockchain, which was built using the Cosmos SDK. Thorchain nodes must bond a dollar amount of Rune that's worth at least 1.5x more than the dollar value of the cryptocurrency in the Thorchain vaults they operate. Now, Thorchain vaults are basically wallets that custody the cryptocurrency on the Thorchain protocol, and they require multiple nodes to sign transactions. It's a bit more complicated than this, but let's roll with it. Now, if Thorchain nodes try and steal the cryptocurrency in these vaults, the Rune they bonded is slashed, i.e. destroyed, and this economic deterrent keeps the Thorchain protocol secure. Like other decentralized exchanges, Thorchain uses an automated market maker mechanism for trading. This involves using the ratio of two cryptocurrencies in a pool to determine their price. Unlike other decentralized exchanges, all cryptocurrencies on Thorchain are pooled with Rune. This is required for the economic incentives that make the Thorchain protocol work and reduces the number of trading pairs, which increases efficiency. So, when someone swaps, say, BTC for ETH on Thorchain, behind the scenes they're essentially sending BTC to a Thorchain vault. Thorchain nodes see this incoming transaction on the Bitcoin blockchain and automatically credit the user's Ethereum wallet with ETH from Thorchain's Ethereum vault, using Rune as reference for price. Note that no oracles are required, as accurate pricing of the cryptocurrencies on Thorchain is maintained by arbitrage traders. The cryptocurrency in Thorchain's vaults comes from liquidity providers who pool Rune with other cryptocurrencies in exchange for protocol fees and trading fees on the pairs they provide liquidity for. Bonding Rune or providing liquidity can be quite lucrative, but the threshold for the former is currently quite high, at around 300,000 Rune according to staking rewards. To ensure the protocol remains stable, Thorchain uses something called an incentive pendulum to increase or decrease Rune rewards to nodes and liquidity providers based on protocol conditions. All protocol fees are of course paid in Rune, and this includes the transaction fees on the blockchains supported by the Thorchain protocol, which are actually paid for using the crypto in Thorchain's vaults. Thorchain currently supports Bitcoin, Ethereum, Binance Coin, Litecoin, Dogecoin, and Bitcoin Cash. Swapping cryptos between chains can take as little as a few seconds, though these swaps can be quite costly depending on the transaction fees on the associated blockchains. The trade-off is that Thorchain is decentralized, meaning no email address, phone number, or KYC documentation is required to use it. Note that Thorchain is intended to be the back end of DEXs that use its protocol behind the scenes, and the most famous of these front ends is probably the Shapeshift cryptocurrency wallet. Now, this all barely scratches the surface of how Thorchain works, but you can learn more by watching my first video about the project using the link in the description. Now, it's been a few months since I last covered Thorchain, and a lot has happened since then. On the same day my last video about the project went live, Thorchain announced that it had completed 2 audits to ensure the same exploits that happened over the summer don't happen again. To quickly recap, Thorchain lost over $13 million in cryptocurrency last July to a hacker who wanted to, quote, teach Thorchain a lesson for moving too fast in its development. Thorchain subsequently shut down its protocol out of caution and restarted it shortly before I last covered the project in October. Despite the October audits, Thorchain developers still discovered some serious bugs in early November, and the Thorchain blockchain ground to a halt 1 week later. Thankfully, the Thorchain blockchain was back up and running a few days later, but this was of little comfort to those who had participated in the ThorSwap IDO a few days prior. Now, as far as I understand, many in the Thorchain community believe that the Thorchain team front-ran the IDO using the Thorchain treasury. Put simply, they were able to invest sooner and made massive gains as a result. Thorchain's technical lead, Chad Barrowford, addressed this in a video shortly afterwards and claimed that the Thorchain team didn't intend to front-run the community, but, judging by the comments, the community was not satisfied with his explanation. For what it's worth, a post on the Runebase blog notes that the Thorchain treasury would be airdropping all the Thor tokens it acquired to liquidity providers in the Thor Rune pool, and that any addresses that unsuccessfully tried to claim Thor would receive an airdrop of Thor. At the end of November, Thorchain announced that it had sharded its Asgard vault, dividing it into 2. This increased the number of nodes that could participate on Thorchain while increasing its DEX protocol speed. In early December, Thorchain's ThorSwap front-end partnered with Olympus DAO and integrated with Olympus Pro. Olympus DAO and Olympus Pro are outside the scope of this video, but you can find the details about them in my video about Olympus DAO, which I will leave in the description. Anyways, in mid-December, Thorchain launched its StageNet testnet, making it possible to test its protocol under real economic conditions. You can think of Thorchain's StageNet as being analogous to what Kusama is for Polkadot. At the end of December, a Thorchain project called ThorWallet launched its mobile wallet app for iOS devices, introducing another front-end interface for Thorchain's trustless crypto exchange. An Android version of the wallet launched shortly afterwards. In January, Thorchain started testing Dogecoin, Terra, and synthetic assets on its StageNet. Mainnet support for Dogecoin happened shortly afterwards, and mainnet support for synthetic assets happened just as I was putting this video together. Support for Luna is also expected soon. In early February, Thorchain developers made 2 important announcements. The first was that Thorchain will begin phasing out support for BEP20 and ERC20 Rune. For those who don't know, BEP20 and ERC20 Rune is the only kind of Rune that's available on centralized exchanges, and it's required to mint native Rune to use the Thorchain DEX. Note that this minting is a one-way trip. This so-called kill switch is tentatively planned to be activated once the Thorchain protocol is passed on to the community, at which point any holders of BEP20 and ERC20 Rune would have a limited time to convert their holdings to native Rune with the conversion rate declining over time. Thorchain developers explained that their reason for introducing a kill switch for Rune tokens is to, quote, remove third-party dependencies, namely the risks associated with having Rune on centralized exchanges and in smart contracts that could apparently be exploited. The second important announcement from Thorchain developers was that they would be allowing early investors to access their vested Rune early, so long as they commit to bonding some of it to nodes for at least 12 months or until the Thorchain mainnet goes live. Thorchain developers explained that their reason for introducing this, quote, fast unlock is to ensure Thorchain can achieve at least 100 nodes in preparation for its mainnet launch. At the end of February, Thorchain sharded its Asgard vault again, creating 3 separate shards that can be managed by up to 250 nodes, which could process 250 crypto swaps per second. Earlier this month, Rune rallied on the news that Thorchain would soon be adding support for Terra and was making progress towards its mainnet launch. Now, you can learn more about Terra and why it's so important to decentralized protocols like Thorchain by using the link in the description. Anyhow, as amazing as Thorchain's updates, developments, and announcements have been, Rune seems to be having a hard time as far as price goes. If you're wondering why, the answer seems to be supply. As you can see, Rune has a fairly aggressive vesting schedule, and much of its supply was unlocked over the last few months. Using the Wayback Machine with CoinMarketCap reveals that Rune's circulating supply has increased by 105 million since October, a more than 50% increase compared to its previous circulating supply. Meanwhile, CoinGecko's historical supply data for Rune indicates that only 40 million more has entered circulation since that time, and I suspect these huge discrepancies have to do with how Rune is being counted across the different blockchains it exists on. In any case, it's clear that Rune's supply has grown by quite a bit, and if we take a middle estimate of 70 million Rune and multiply that by an approximate average price of around $6, the result is around $420 million of sell pressure. On the demand side, you have Thorchain nodes that need to buy and bond a sufficient amount of Rune relative to assets in Thorchain vaults, liquidity providers who want to earn yield by providing Rune plus another cryptocurrency to the protocol, and Thorchain users who need Rune to pay for swap fees. Now, based on ThorSwap statistics, it looks like the Thorchain protocol has seen a decent amount of demand from all 3 parties. There are 95 active nodes, each of whom must have purchased at least 300k Rune. Almost $200 million put down by liquidity providers, and thousands of monthly users. The crackdowns we've seen by centralized exchanges on certain users has likely resulted in many people shifting to decentralized alternatives such as Thorchain as well. Given that these kinds of crackdowns are likely to continue as countries align their crypto policies with the recommendations of the Financial Action Task Force, Thorchain could see some serious adoption in the not-so-distant future. Now, you can learn more about what the FATF has planned for crypto by using the link in the description. Anywho, whether Rune can reclaim its previous highs ultimately depends on its roadmap. While Thorchain does have a roadmap, the only milestone currently noted is a full mainnet launch of the protocol. A recent update from Thorchain's developers states that this will take place when the following milestones are met. Thorchain adds support for Terra. Thorname service is activated, something that's required for Thorchain to add support for Monero. Multiple bond provision is enabled, which is analogous to delegation for Thorchain nodes. A hard fork of the Thorchain blockchain to update the version of the Cosmos SDK it's currently using. Additional developer documentation to make Thorchain easy to build on and integrate. Synthetic assets activation, which just happened. At least 100 active nodes. And 30 days of stable operation with all these features implemented. Most, if not all, of these milestones are expected to be met sometime this summer, and Thorchain's mainnet could launch as soon as July. Besides giving control of the protocol to Thorchain's community, Thorchain's mainnet will introduce unlimited staking and liquidity provision. For context, Thorchain currently sets limits on how much crypto can be pooled to minimize losses in the event of an exploit, and this is why you see many in the Thorchain community constantly talking about, quote, raising the caps. Now, additional milestones for Thorchain can be found in interviews and presentations with Chad Barriford, as well as Thorchain's Medium posts. In his presentation at the Messari Mainnet conference in October, Chad noted that Thorchain would be adding support for Cosmos's Interblockchain Communication Protocol, or IBC. This would make Thorchain seamlessly interoperate with other cryptocurrencies that have enabled IBC. Funnily enough, Thorchain's developers noted in a November update that they would not be adding IBC because it doesn't provide the same economic guarantees as Thorchain's current setup, among other things. Another milestone Chad mentioned in his presentation was the introduction of Thor Savings, which will make it possible to earn a stable 20% interest rate on any cryptocurrency. Thor Savings should be released by June this year. While I wasn't able to find any details about how Thor Savings will work, based on Chad's description, it'll essentially involve delegating your crypto to liquidity providers on Thorchain who are earning much higher yields than 20%. These yields will presumably be paid out in the crypto you delegated with. Now, I suspect this will be the setup because Thor Savings will be modeled after Terra's Anchor protocol, and you can find out how it delivers a stable 20% interest rate on the UST stablecoin using the link in the description. Now, back to Thorchain. In Thorchain's monthly treasury report for November, Thorchain's devs noted that they will be splitting up Thorchain's massive treasury among 5 to 10 node operators, community members, and teams working on Thorchain. In a recent developer report, the Thorchain team mentioned that it's in the process of adding 9 additional cryptocurrencies to its cross-chain protocol. These are Cosmos, Haven Protocol, Decred, Dash, Zcash, the Binance Smart Chain, Avalanche, and last but not least, Monero. No dates have been provided for when these integrations will take place, and that seems to be because Thorchain's developers are focused on adding support for Terra for the time being. Speaking of which, in a December interview, Chad mentioned that he's eager to begin working on something else, and hinted that he's going to be stepping back from the project once Thorchain's mainnet milestones are met. Now this brings me on to a few of the potential challenges that I foresee for Thorchain. The first of these is to do with Thorchain's security and development. It looks like Thorchain still isn't nearly as secure as it needs to be for a mainnet launch. Now, in Thorchain's defense, Chad mentioned in his presentation at the Messari Mainnet conference that Thorchain consists of 200,000 lines of code compared to the 2,000 lines of code you find in standard dexes. The only problem is that this makes vetting Thorchain's code extremely difficult, and Chad himself has admitted on many occasions that Thorchain's complexity has been a turn-off for many crypto developers. This ties into the second challenge for Thorchain, and that's what happens when its mainnet is launched. I'll start by reminding everyone that Thorchain's transition to mainnet is called planned obsolescence, which really isn't the best branding. This is because it implies the project will become, quote, obsolescent when it's done. In all seriousness, it sounds like a few members of the core team are planning to step back from the project. And not only that, but Thorchain's developers could also have handled the ThorSwap IDO better, and I question the motivations behind Thorchain's plans to phase out BEP20 and ERC20 Rune. As I mentioned earlier, native Rune is not listed on any centralized exchanges, and this begs the question of how it will be possible to acquire the native Rune required to pay for swap fees on the protocol when the kill switch for native conversion is complete. To be fair, this is something that could be easily resolved with an upgrade to the protocol, but I find it hard to wrap my head around how Rune's price on the DEX will remain reliable in the absence of a reference price on centralized exchanges. I am not a DeFi degen by any means, but even I can see that there will be a huge incentive for malicious actors to manipulate the price of Rune, since all the cryptocurrencies supported by Thorchain trade against it. The final challenge I foresee is regulations. Obviously, regulators aren't going to be very happy about a crypto project that makes it possible to trade cryptocurrencies without KYC, including privacy coins. This means Thorchain could find itself in the same bucket as privacy coins, mixers, and other privacy-preserving technologies that are closely watched by blockchain analytics companies. More about them in the description. With all that being said, though, as long as Thorchain can deliver on its promises, secure trust from the crypto community, and keep its nodes and developers under the radar, I truly believe Rune could eventually become one of the most valuable cryptocurrencies on the market. And that's it for today's video about Thorchain. If you enjoyed it, smash that like button to let me know. Be sure to subscribe to the channel and ping that notification bell to make sure you don't miss the next video. If you wanted to pick up some Rune, your best bet is at KuCoin, where I have a special dealio. More about that in the description below. If you're looking for more from the Coin Bureau, here is where you can go. Coin Bureau Clips is my second channel here on the tube. The Coin Bureau podcast is where I discuss crypto in the future, the present, and the past. Twitter, TikTok, and Instagram are where I share memes and my thoughts in real time, and my Telegram channel is packed with daily crypto updates that will help keep your portfolio in line. My weekly newsletter is where you can find mine, and it'll help you keep up with the crypto market if you're falling behind. If you're wondering why I'm not poor, the answer is the Coin Bureau merch store. It's where you'll find crypto-themed hoodies, sweaters, tees, mugs, and more. You can find your way to all these resources using the links down below. Thanks for sticking around until the end of the show. It means a lot to this crypto bro. I'll see you all real soon, and so, cheerio.